So hello everyone, welcome to UGC NET Management 60 days 60-minute challenge. Today we are going to continue with our studies. Today is day 27 I believe. So we are almost approaching 50% of our target. So we will continue from here. Let us see. So in a monopoly, the total cost terms remains the same. That means the total cost and the fixed costs and the variable cost. The per unit cost scenario changes. A monopoly is a market where a single firm is the sole seller of a product with no close substitutes. Because the monopolist control the entire market, it has a price setting power. The monopolist decides the profit maximizing level of output where MR is equal to MC. This is the golden rule for profit maximization in all market structures, including monopoly. After choosing the output level where MR is equal to MC, the monopolist charges the highest price consumers are willing to pay. After choosing the output level where MR is equal to MC, the golden rule for profit maximization in all market structures is MR marginal revenue is equal to marginal cost. Marginal revenue, marginal cost, including monopoly. After choosing the output level where MR is equal to MC, the monopolist charges the highest price consumers are willing to pay, which lies on the demand curve, AR curve. Okay, profit conditions. When AR is greater than AC. So once the nature of the firm's profit is set, that means this point is set where MR is equal to MC. The nature of the firm's profit is determined by comparing the price AR price to AC, average cost. At this point only, where we have fixed this, we will compare AR and AC. If AR is greater than AC, that means supernormal profit. Price per unit, cost per unit. The firm earns above profit above normal, common for monopolies due to lack of competition. If AR is equal to AC, like it is passing through here, AR is passing through this. Normal profit, price per unit is equal to cost per unit. The firm covers all its costs, including opportunity cost of capital. It breaks even earning just enough to stay in business. AR curve touches the AC curve at the choosing point. If AR is less than AC, that means loss. This point. AR is this point and this is AC. If AR is less than AC, that means price per unit is less than average cost per unit. The firm incurs a loss. A monopolist may still operate in the short run if it covers average variable cost. Generally, AR curve lies below the AC curve at the chosen output graphically. Normal profit, normal profit. Okay, so this we have learned at MR is equal to MC is the profit maximization rule. So this we have learned. Now we will be able to remember MR is equal to MC is the profit maximizing rule, and wherever they meet, there we will compare average revenue and average cost. What is a cost sheet? A cost sheet is a formal statement that presents the detailed cost components of producing a product or service in a structured and logical order. It primarily used for determining total cost of the product, cost per unit, assisting in pricing decisions, controlling cost, and facilitating cost comparison over periods between products. It is typically prepared monthly, quarterly, or for specific jobs or batches. A cost sheet is a formal statement that presents the detailed cost components of producing a product or service in a structured and logical order. It is primarily used for determining the total cost and cost per unit, assisting in pricing decision, cost controlling, and facilitating cost comparison over periods or between products. It is typically prepared periodically for specific jobs or batches. A cost sheet is a formal statement that presents the detailed cost components of producing a product or service in a structured and logical order. It is primarily used for determining the total cost and cost per unit, assisting in pricing decisions, controlling cost, and facilitating cost comparison over periods between products that is typically prepared periodically or for specific jobs or batches. Objectives of a cost sheet to ascertain the total and per unit cost of production and sale, to analyze cost elements to help with budgeting, cost control, and decision making. Objective of a cost sheet to ascertain the total and per unit cost of production and sale, to analyze cost elements to help with budgeting, cost control, and decision making. Structure and typical order in cost components in a cost sheet. The components of a cost sheet are listed in logical progression from raw materials to final sale. Here are the standard format and order. Direct cost, to calculate prime cost. These are costs that can be directly traced to the product: direct material consumed, direct labor, direct expenses. So prime cost is direct material, labor, and expenses. This we can remember now. Direct material, direct labor, direct expenses is a prime cost, which is equal to direct material, labor. Then comes factory or work overheads, to calculate work cost or factory costs or work cost. Indirect material, indirect labor, factory rent, depreciation, machinery, etc. Prime cost plus factory overheads. Then comes administrative overheads related to production only. Office expenses related to production, not general administration. Factory cost adds a prac opening and closing, finishing of goods. है ना? Materials example. Selling and distribution overhead, cost of production plus selling and distribution overhead, cost of services, cost of production. So पहले प्राइम कॉस्ट आता है, फिर उसके ऊपर फैक्ट्री या वर्कर्स वर्क कॉस्ट और फैक्ट्री कॉस्ट और वर्क ओवरहेड, फैक्ट्री ओवरहेड, देन एडमिनिस्ट्रेटिव ओवरहेड, कॉस्ट ऑफ प्रोडक्शन। ओवरहेड ऐड करते हैं तो मिलता है कॉस्ट ऑफ प्रोडक्शन, कॉस्ट ऑफ प्रोडक्शन से हमें मिलता है कॉस्ट ऑफ सेल्स, कॉस्ट ऑफ प्रोडक्शन प्लस सेलिंग एंड डिस्ट्रीब्यूशन। सेलिंग प्राइस इज कॉस्ट ऑफ सेल्स प्लस प्रॉफिट। और यहाँ पे हमें डायरेक्ट दिया है डायरेक्ट मटेरियल कंज्यूम्ड प्लस डायरेक्ट लेबर प्लस डायरेक्ट एक्सपेंसेस इज इक्वल टू प्राइम कॉस्ट प्लस फैक्ट्री ओवरहेड is equal to factory overhead cost plus administrative overhead is equal to cost of production plus selling and distribution overhead is equal to cost of sales plus profit is equal to selling price. Fixed cost, variable cost, sales revenue, revenue minus expenses ये हमने पढ़ा है. Revenue is equal to profit is revenue minus expenses. Revenue is equal to profit plus expenses. So revenue is equal to profit plus expenses is fixed cost plus variable cost. So, gross revenue, net revenue. Sales, returns, discounts and allowances. So, and returns negative or discounts negative. Cash plus credit, cash sales revenue, income from immediate payment, cash credit sales revenue, income expected from customer at a later date. What is contribution margin? The contribution margin is the difference between sales revenue and variable cost. Contribution margin is equal to sales revenue minus total variable cost. Contribution per unit is selling contribution per unit is sales revenue, selling price per unit upon variable cost per unit. Price of a product is variable cost. It indicates how much money from each sale is available to cover the company's fixed costs and generate profit. We have studied contribution is equal to sales minus variable cost. Sales minus variable cost. Now this is important, okay? Profit volume ratio. PV ratio. In managerial decision making, understanding how sales revenue interact with cost behavior is crucial. One key metric that helps managers assess profitability and make informed decisions is the PV ratio. This ratio provides insight into the relationship between sales, variable cost, and contribution, ultimately influencing a firm's profitability. The profit volume ratio is defined as the ratio of contribution to sales, and contribution is sales minus variable cost. So क्या बचा sales में? Let's say variable cost is removed, so fixed cost is बचा. Fixed cost plus profit बचा. Fixed cost plus profit upon sales. So it is contribution minus upon sales. It indicates the contribution earned per rupee of sales. A contribution is a portion of sales revenue that is not consumed by variable cost and therefore contributes to the coverage of fixed cost and profit. The PV ratio measures how much contribution is earned per rupee of sales. When given profit figures and sales figures for two periods, the PV ratio can be change in profit upon change in sales into 100, change in profit upon change in sales into 100. चेंज इन प्रॉफिट अपॉन चेंज इन सेल्स 100 इतना आसान है सी. Definition of PV ratio components: sales total revenue earned by the business, variable cost and that cost that vary with the level of output of sales. The amount remaining sales minus variable cost is contribution, and sales is profit plus fixed cost. A higher PV ratio indicates a better profitability as a greater portion of each sales rupee contributes to fixed cost and profit. A low PV ratio suggests high variability and weaker profit generation. Profit planning helps in estimating the level of sales required to achieve a desired profit. Break-even high implies a lower break-even point. Let's say a company has sales 5 lakh, variable cost 3 lakh. His contribution is sales minus variable cost 2 lakh. So it means 40% of the sales revenue contributes towards covering fixed costs and profit. Okay, this is done. And if दो different years का दिया गया, so PV ratio is change in profit upon change in sales into 100. ब्रेक इवन पॉइंट कैसे निकालते हैं? ब्रेक इवन पॉइंट इज लेवल ऑफ सेल्स आउटपुट एट विच टोटल रेवेन्यू इक्वल्स टोटल कॉस्ट resulting in zero profit and zero loss. It is a critical financial metric used in cost volume analysis. वो PV profit volume ratio था, ये CVP analysis है, cost volume profit analysis to determine the minimum level of sales needed to cover all fixed cost and variable cost. Break-even point is the point at which total revenue is equal to total cost and the business makes no profit, no loss. Formula, the two main formulas for BPs. BP is fixed cost upon contribution per unit. Price per unit. In units, and sits in sales value. BP sales is fixed cost upon PV ratio, contribution per unit. PV ratio is contribution upon sales into 100. Margin of safety. Once the break-even point is crossed, every additional sale contributes to profit. The margin of safety shows how much sales exceeds break-even point. Actual sales minus break-even sales. Bus margin of safety is how much sale exceeds the break-even point. As additional units of a variable input are added to fixed output, the marginal product of the variable input will eventually decline, holding all the other inputs constant. Additional units of a variable input are added to a fixed input. The marginal product of the variable input will eventually decline, holding all other inputs constant. In simpler terms, after a certain point, adding more of one unit will, while keeping the others fixed, results in smaller and smaller increase in output. This is law of diminishing returns. Law of diminishing returns we have studied previously, I believe. Law of diminishing returns. Introduction to this is important. Let's see. Introduction to CVP analysis. Cost volume profit analysis is a financial modeling tool that helps businesses understand the relationship between cost, sales volume, and profit. It provides valuable insights into how changes in production levels, pricing strategies, and cost structures can impact a company's profitability. By breaking down cost into fixed and variable components and evaluating the effects of different sales volume, CVP analysis enables managers to make informed decisions on pricing, production levels, and product mix. This analysis is particularly useful for determining the break-even point, the level of sales, cost, volume, profit analysis. There's establishing fixed cost and variable cost related to the product. Okay. Calculating the relationship between sales volume and sales revenue by actual or assumed unit. We now calculate sales volume. This will help determine how much revenue is generated from selling a revenue is the amount generated by selling products at a certain price. Means sales volume and sales revenue by actual or assumed unit prices. Working out PV ratio by calculating contribution as a proportion of sales revenue. Drawing up break-even charts which establish a point at which. Okay. And then determining cumulative effect of each product on profitability to assess the effects of change in product mix. Inventory inventory valuation methods accounting approaches used to determine the cost assigned to inventory at the end of an accounting period, the cost of goods sold. Now we have reached our next unit, which we will call as first okay, we'll take a 6 minutes break. So okay, let's take a 5 minutes break. We'll start again after 5 minutes because we completed one half of a module and we can start a new one, which will be the final one. So we are back. Let's start. Oh. Inventory valuation methods. Valuation methods are accounting approaches used to determine the cost assigned to inventory at the end of accounting period and the cost of goods sold during the period. These methods play a crucial role in preparing accurate financial statements and in understanding a company's profitability and asset management. Purpose of inventory valuation. Inventory valuation helps in determining cost of goods sold, calculating gross profit and net income, valuing ending inventory on a balance sheet, complying with accounting standards. Okay, we'll see. Common inventory valuation methods is first in, first out, assumes the oldest inventory items are sold first. Ending inventory reflects the most recent costs, often aligns with physical flow of goods. Last in, first out assumes the most recently purchased items are sold first. Ending inventory costs consist of older cost, common in industries where inventory costs fluctuate frequently, permitted under US GAAP but not allowed under IFRS. Weighted average calculates the average cost per unit of inventory by dividing the total cost of goods available for sale by the total units available. Smooths out price fluctuations suitable when inventory items are indistinguishable or homogeneous. Specific identification tracks the actual cost of each individual item sold and remaining in inventory used for high value unique items. Most precise method but impractical for large volume inventory. The choice of inventory method affects financial results, including profits and taxes. It must be applied consistently over time for comparability. Companies may choose a method based on cost, behavior, business model, or regulatory environments. So हमें चार टाइप के इन्वेंट्री वैल्यूएशन मेथड है. हमने सब पढ़ लिया. फर्स्ट इन लास्ट इन फर्स्ट आउट, वेटेड एवरेज कॉस्ट एंड स्पेसिफिक आइडेंटिफिकेशन. जो लास्ट इन फर्स्ट आउट है, इट इज अलाउड इन गैप but not in IFRS. So this is done. This we will mark as complete. Then we'll go to standard costing. In standard costing and variance analysis, various types of variances are calculated to evaluate but the performance of a company in terms of how closely actual cost align with the budgeted or standard cost. Below is a detailed explanation of each type. Standard costing is an accounting method used to determine the expected cost of production for materials, labor, and overhead. These standard costs are predetermined costs set by company based on historical data, industry standards, or management expectations. The primary purpose of standard costing is to create a baseline or budget for production cost, which can then be compared to actual cost to assess performance. Standard costing. Standard costing is an accounting method used to estimate the expected cost of production for materials, labor, and overhead. These standard costs are predetermined costs set by the company based on historical data, industry standards, or management's expectation. The primary purpose of standard costing is to create a baseline or budget for production cost, which can then be compared to actual cost to assess performance. Standard costing is accounting method used to estimate the expected cost of production for materials, labor, and overhead. These standard costs are predetermined costs set by the company based on historical data, industry standards, and management's expectations. The primary purpose of standard costing is to create a baseline for budget or production, which can then be compared to actual cost to assess performance. Key characteristic helps in cost control and budgeting, provides a means to measure efficiency and cost management. Standard costs are calculated for materials, labor, and overhead. Example, a company might set a standard cost of $5 per unit of material based on historical data, which then will then be used to compare against the actual cost incurred when purchasing or using the material. Okay, material variance, material cost variance, material cost variance, material price variance, material usage variance, material mix variance. Oh, we'll see. So material cost variance is the difference between actual cost of materials used in production and the standard cost expected to be incurred for the same quantity of material. The variance is important for understanding whether a company is spending more or less on materials than planned. Material cost variance, standard pricing into standard quantity minus actual price into actual quantity. Material price variance, standard price into price measures the difference between the standard price and the actual price paid for materials. The actual quantity purchased. प्राइस वेरिएंस जो हम प्राइस कॉस्ट वेरिएंस कॉस्ट इज हमेशा क्वांटिटी इनटू प्राइस सो स्टैंडर्ड प्राइस इनटू स्टैंडर्ड क्वांटिटी माइनस एक्चुअल प्राइस इनटू एक्चुअल क्वांटिटी दिस इज मटेरियल कॉस्ट वेरिएंस मटेरियल प्राइस वेरिएंस इज स्टैंडर्ड प्राइस माइनस एक्चुअल प्राइस इनटू एक्चुअल क्वांटिटी प्राइस कितना वेरी हुआ मटेरियल यूसेज स्टैंडर्ड क्वांटिटी माइनस एक्चुअल क्वांटिटी इनटू स्टैंडर्ड प्राइस इधर एक्चुअल प्राइस क्यों नहीं यूज हुआ मटेरियल मिक्स वेरिएंस standard cost of actual quantity or of actual mixture standard cost of actual quantity of standard mixture of standard mixture so what we'll do is हम यही तक रखेंगे we will start solving sums this we can continue it tomorrow so we'll start solving let's see how much we know see price volume PV ratio हमने पढ़ा था change in sales upon change in sales upon change in profit I believe so. So 57 minus 32 is 25 upon 7 minus of minus 3 is 10. So 25. So 10 upon 25. 10 upon 25 is 40% के around I believe so. Yeah, so yes. Change in profit in change in sales. Receipt of interest on foreign investment and royalties on trademark. Product frequency of the following balance of payment. Let's see the syllabus. Balance of payment is unit 9, so this question doesn't belong here. So rectify balance of payment MCQ in unit 4 to unit 9. Which concept of profits states that profits are normally recognized when the title to the goods passes to the customer, not necessary when money changes hands. या तो realization है या matching है. We'll go with realization. In which of the following cases will there be a flow of funds? ये हमने पढ़ा था. Issue of share for cash, working flow of funds के लिए working capital में change आना चाहिए. Payment of creditors by issue of shares, working capital नहीं change हुआ और D में भी नहीं change हुआ. So A, B, C. A, D, E. हमने गलत पढ़ा हुआ reinforce कर लिया हमारे brains में. It's okay. Prepaid salary हमने पढ़ा था ये personal account. Manufacturer for the current अच्छा, ब्रेक इवन पॉइंट ये हम कर सकते हो कि ब्रेक इवन पॉइंट कैसे निकालेंगे हम? लेट्स सी। ये क्वेश्चन हम एक्स इधर ड्रॉ करते हैं। सी ये हम वी विल सॉल्व दिस हियर। AB Limited manufactures filing cabinets for the current. So first fixed cost for the year is 10,000. So first let's write fixed cost. Fixed cost हमारे पास है 10,000. 10 lakh, we have 10 lakh. And fully variable cost are 60% of the sales. What is a break even point? हमें break even point निकालना है. Okay. 10 lakhs तो हमारे वैसे ही चलेगा. For the current year, the company expects to sell 4,000 cabinets, involving a loss of 2 lakhs. Only 40% of the plant's normal capacity is being utilized during the current year. Okay, 40% plant utilization. Current year, the company expects to sell 4,000 cabinets, involving a loss of 2 lakh. The fixed and the fully variable cost at 60% of the sales value. सो हमें ब्रेक इवन पॉइंट पे पता है क्या होता है. ब्रेक इवन पॉइंट पे होता है सेल्स वैल्यू. हमने ये तो पढ़ा है. सेल्स वैल्यू इज इक्वल टू टोटल कॉस्ट. इतना हमें पता है. अभी टोटल कॉस्ट इज इक्वल टू फिक्स्ड कॉस्ट प्लस वेरिएबल कॉस्ट इज इक्वल टू सेल्स वैल्यू. अभी हम फिक्स कॉस्ट को लेते हैं 20 लैक्स, 10 लैक्स जो हमें दिया गया है. अब वेरिएबल कॉस्ट क्या बोला गया है? Variable fully variable cost are 60% of the sales value. So we will write 0.6. सेल्स वैल्यू की समझो ये यूनिट है. कुछ भी सेल्स वैल्यू आ 10 लाख 20 तो, और इधर 1 सेल्स वैल्यू है. ये होने वाला है अभी 10 लैक्स हम उससे सामने भेजेंगे तो 1 सेल्स वैल्यू माइनस 0.6 सेल्स वैल्यू which is 0.4 sales value equal to 10 lakh. So अब हम दोनों साइड 0.4 से डिवाइड करेंगे. Here this and this will get cancelled, and the left 10 lakh will become divided by 10, 1 crore, 1 crore divided by 4, this will become 25 lakh sales volume. So what is the break even point in terms of sales value? It will be sales value break even टर्म्स में सेल्स वैल्यू शुड बी इक्वल टू 25 लाख, ये हमें मिला है सॉल्विंग से. So that is the answer. This is how we do it. Cash flows are grouped in the cash flow statement as per IND AS3 into which of the following major categories. हमने तीन पढ़े थे, operating, investing and financing activities, if you remember. Accounting principles are generally based on uh, convenience in recording, could be practicability, yes, subjectivity. Legal framework, we can say. Accounting principles. Legal framework are based on accounting principles, if you think about it. It is practicability. Outstanding wages. In case of financial enterprises, cash flow arisen from flow, dividend received and paid issued in cash statement under which of the following? Dividend paid is financing activities. No. डिविडेंड का पे करना, इट इज ऑपरेटिंग, मतलब ऑपरेटिंग बजट से पैसा जा रहा है. डिविडेंड रिसीव्ड इज ऑपरेटिंग एक्टिविटीज. डिविडेंड रिसीव होता है हमें. सही है. व्हेन डिविडेंड इज रिसीव्ड हमारा फाइनेंसिंग ऑपरेटिंग एक्टिविटीज बढ़ रहा है क्योंकि पैसे मिल रहे हैं, और जब दिया जा रहा है तो फाइनेंस हो रहा है. ओके. ए बी मैन्युफैक्चरर्स, ये तो हमने अब भी किया था. Which of the following in which of the following cases will there be flow of funds? Purchase of furniture for cash, purchase of building of issue. See, flow of funds. Okay, working capital में change होना चाहिए. Purchase of furniture for cash, हम cash दे रहे, working capital change होगा. Payment of creditor by issue of debenture, इससे working capital change नहीं होगा. Cash collection, परचेज ऑफ बिल्डिंग बाय इशू ऑफ शेयर्स. सी, ये तो होगा ही नहीं. परचेज ऑफ इशू शेयर आपने दिया है तो वर्किंग कैपिटल तो चेंज हुआ ही नहीं. सो सी तो नहीं है. सी इज नॉट देयर. सी इज नॉट देयर. आधे ए एंड डी और ए डी ई. सो डी ई से डिटरमाइन करना है. कैश कलेक्शन फ्रॉम डेटर्स शुड इंक्रीज, है ना, वो इंक्रीज करेगा हमारा वर्किंग कैपिटल क्योंकि कंपनी में कैश आएगा. एंड वी आर रॉन्ग. लेट्स ट्राई अगेन. ये हमें पता है, वी हैव स्टडीड इट. 7 is IND AS7 is statement of cash flows. So 1 का C का A, C का 1, there is only 2 options. D का 3 है. A 8 is accounting policies, A का 2 है. Based on the following, this we don't know, so we'll mark 1. Pearson company, Per Limited company purchased a van for $12,000, making a down payment of 5,000 cash and signing a 7,000 note payable in 60 days. As a result, total assets increased by of the company increased by 12,000. Correct. Liabilities did not increase by 12,000. Why? Because cash हमने 5,000 दिया है, so liability सिर्फ 7,000 से बढ़नी चाहिए जो हमें 60 days में पे करनी है. So A आना चाहिए, B नहीं होना चाहिए. A है, B नहीं होना चाहिए, B नहीं होना चाहिए, B नहीं होना चाहिए. So C. So the transaction will not have immediate effect on owner's equity in the business. Correct. Equity से उसका ownership नहीं change होगी. Idle capacity costs due to avoidable causes are transferred to which of the following? Avoidable causes. Okay. प्राइम कॉस्ट तो नहीं है, प्राइम कॉस्ट इज डायरेक्ट लेबर, डायरेक्ट मटेरियल कंज्यूम्ड एंड ऑल, या ये कॉस्टिंग प्रॉफिट एंड लॉस अकाउंट भी नहीं, फैक्ट्री ओवरहेड या कॉस्ट ऑफ प्रोडक्शन हो सकता है। आइडल कैपेसिटी कॉस्ट ड्यू टू अवॉइडेबल कॉस्ट आर ट्रांसफर टू विच ऑफ द फॉलोइंग हेड्स, फैक्ट्री ओवरहेड्स या कॉस्ट ऑफ प्रोडक्शन, मोस्ट प्रोबेबली कॉस्ट ऑफ प्रोडक्शन आई बिलीव, बिकॉज फैक्ट्री ओवरहेड में कॉस्ट, एडमिनिस्ट्रेटिव कॉस्ट एंड एवरीथिंग वो सब आएगा। यहाँ पे हमने अब भी पढ़ा मटेरियल कंज्यूम सबसे पहले आएगा, फिर उसके बाद प्राइम कॉस्ट आएगा, तो सी बी से जो भी शुरू होगा, ए बीच में सी होगा और फिर ए होगा, तो सी ए के दो है, उसके बाद बी या डी आएगा, पहले फैक्ट्री कॉस्ट आएगा फिर डी आएगा, कॉस्ट ऑफ प्रोडक्शन हमने पढ़ा। तो ये आएगा, ये भी हमने पढ़ा, पीवी रेशियो, चेंज इन प्रॉफिट और लॉस अपॉन चेंज इन, so this is 7 minus of minus 3 is 10 lakhs upon 57 minus 30 to 25, 10 upon 25 is 40%. The best level of output for perfectly competitive market in a short run is a point where P is equal to, provided that the best level of output for a perfectly competitive firm in a short run is a point where P is equal to M or is equal to MC, provided that price is equal to average variable cost greater or equal to, it should never be less than, greater than होना चाहिए, this was not covered, we'll have to check. Related to cash flow statements, we know it is IND 3 and 7. See, IND AS3 is cash flow statement, AS7 is statement of cash flow, so cash flow statement is 7. No, this is wrong, I believe. So we have to check to, यहाँ लिखिएगा, verify verify, that is what we'll do. So this will be all for today. Uh, tomorrow we will be finishing the chapter 4. We will see, and then we could uh, tomorrow most probably we'll be finishing with unit 4. So we can see that if you put in 30 hours a day, so let's say अगर आप every Saturday, if you're a working uh, professional, and every Saturday Sunday you put in 4 hours, so every week you can cover one unit in general, not much required. So यहाँ पे हम we see this, we'll continue this in the next session. We have to practice now unit 4. We'll check for the questions we have marked, so that there is no mistake in it. You might have any questions, to let me know in the comments below. And yeah, also we are reaching the end of October. The time frame to enroll is by 7th or 8th November for UGC NET examination this cycle, so please remember to do it before that. Avoid any last minute hassle. And considering the timeline that we are following, the exam will happen in December. Most probably we'll be able to end this by in the first or second week of December, the practice and yeah, preparation. So that we are well prepared for the examination. And also after the examination, we can once the paper is out, we can we can keep a session where we compare whatever questions were asked in the exam, are they covered here or not. So that will help the users as well. And yeah, till now, if we see the statistics, uh, we have missed, I believe, 3 days, but we are still going strong. And we plan to finish all the units, ideally, practically. Even if we finish 7 to 8 units, that's very good. We'll be covering most of the subjects, and the remaining we'll cover at the end with what time we have left. And question wise, in the paper, in the paper 2, you can say not many questions are asked. We can expect sums like these which you see on the screen to be of around 10 to 15 marks max. Different types of questions, rest all most probably would be based on theory. So thank you all for joining. I'll see you tomorrow again in UGC NET Management, 60 days 60